Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, April 18th, 2011. Well, folks, let's get into the charts today. We're seeing a big down day on Wall Street on the back of S&P, Standard & Poor's, downgrading the outlook for U.S. debt to negative. And this is, again, a big thing. It shouldn't be coming as a huge surprise to anyone out there who knows about the amount of money the Federal Reserve has printed over the last few years, trillions of dollars. But I think it's a shock because people just didn't think it was going to happen as of today. Yes, okay, down the line, everyone kind of expects it, but who knew it was going to really happen right this second today? That's what kind of shocked the markets. And I think the markets have been in a little bit of a denial phase where, we've had all these issues in Europe, in Japan, in the Middle East, and the markets for the most part are near their highs. And today, all of a sudden, all right, well, Standard & Poor's downgrading the outlook for U.S. debt to negative. That is a shot across the bow, a warning signal, and again, something the markets are getting a little scared about today. Dow Jones Industrial Average down 218 points, NASDAQ down 52, S&P 500 down about 21 points, 1.75% on average across the board. That is a big drop. Volume today, 124 million already. This is more volume than we did Friday or Thursday of last week. Basically, this is the amount that we did those days. We're already here at a little after 1 p.m. Eastern Time. Now, initially, you can see the markets had a big gap down and flushed. Notice how the levels continue to work. These are master levels on the charts, folks, calculated by our premium proprietary techniques. And again, we use them in the chat room to scalp, and sure enough, the scalps have worked wonders today. Take a look. Down. First candle tags the green line. Look at the size of the bounce, all the way back to the blue line. The next candles go down to the yellow line. Look at the bounce. Next candles make a beautiful double bottom, never confirmed below the yellow line. Reverse to the upside. We're hovering just below, at this point, the 20 moving average and the green trend line at this point. So just continue to monitor that. You could make a case we have a small bull flag pattern here, or I should call it an in spirit of bull flag, as it's not an exact bull flag, but take a look right there. That's a small in spirit of. As long as you stay above the yellow line, that can hold true for the time being. And again, that may tell us that we may have a move up later today. Stocks that are getting smacked today, there's a lot of them, folks. Google, after bad earnings or earnings that didn't meet Wall Street's view Thursday after the bell. Friday, Google got smacked. Today, it's getting hit again, down $9. Take a look at your daily chart on Google. You want to see a river theory, a good example? Look at this. Draw your trend line right here. The gap down takes you below this double bottom right here. And this is going back to Thursday's open. You have the 200 moving average right here. All these master levels, you see a gap below that. What does that tell us? It's a river theory. It's going to continue in that direction for the short term, and that's exactly the direction it's gone. Now, the river theory is a proprietary technique we've developed here at In The Money Stocks, just one of many. And the way you want to get involved and learn these techniques, join the Research Center or join the Intraday Stock Chat. You can take a 1-week free trial, folks. 1-week free trial of both services or one or the other. And again, go to InTheMoneyStocks.com, click on the free trial banner, and take your free trial. Start mastering the markets, making the profits the pros make. Join us now. All right, again, Google taking a nice hit. You want to see where Google's headed right here? Take a look right here. This is where it's headed, in my opinion. It's very close to that. You see these little tails right down here? This area I'm drawing in. You're at the top level of this area. You have a gap fill there, and these little tails sloping down, forcing a little bit of a base right there. Look at the current price on Google, where it's finding support right now, just in the upper range. It may tick down just a little bit over the next day or so to the lower range, but it should find a bounce level support there. All right, so watch that very closely on Google. Taking a look at some other stocks. You want to see something impressive here? Take a look at Apple Computer. Draw a baseline right across here and look at what's going on. Apple may be in breakdown mode unless it can recapture this level in the last couple hours of the trading day. You take this pivot low. This is where we called the bounce on Apple. Got a beautiful bounce up. Now it's come back down, and it's actually below this line. If it closes below this line, it may be headed towards the 200 moving average down here at around 307, 308 in the short term. We will be watching that very carefully. Apple is down to $4 on the day. Next up, let's take a look at Amazon. Amazon's actually into support, trying to hold support here. Take a look. It had a huge run up. Now it's coming back in. Hammered right on the 50 moving average and the 20 moving average. Take your line, draw it across to gap fill. Look at this. You basically came down to gap fill. You're holding the 50 and 20. There's a ton of support right here. Ton of support. All right, let's take a look at a couple other stocks. Other stocks breaking lower. Cisco Systems. Look at this, folks. Take a look at this trend line. You just draw this trend line right across. Short term, look at we're breaking below support. And again, where is this going to go? I have another support level right down here. This is probably your next stop on Cisco, and that would be at a price around $16.20, $16.25. Want to see another good stock for support levels? Take a look at LDK. I like LDK for a couple reasons here. I just featured this on the blog, and you should always be following the Rant and Rave blog throughout the day because my partner Nick and I, we put up key levels for stocks to watch intraday and as swing trades sometimes on that. And one thing I like here is the 200 moving average right there. Also, you have gap fill. Take your line and draw it right across from gap fill, and you have a double bottom. So hit here. Here's your gap fill. Here's your 200 moving average. All of them coming together right there. And look at the bounce you've already gotten. That should be solid support as long as it holds above the 200 moving average. All right, let's take a look at one more. I want to give you guys one more to watch. JP Morgan Chase. You can also follow this one on the blog. Look at this. Little pivot low support right here at $43.40. That is your level of support if it hits today. You should be buying that for a short-term swing trade. I think this is the way it's going to go. I think today and tomorrow you're going to see a little jittery market, although a majority of the downside is in today. I think by tomorrow you'll flush out, and then by Wednesday and Thursday you're going to start to head back up. The reason I'm saying that is because the holidays are here. You have Passover, you have Easter, two major holidays. Volume is going to get lighter and lighter throughout the week. That will bode positively for the markets. All right, and I know this downgrade in outlook debt for the debt of the U.S. by Standard & Poor's does seem significant, but it's only an outlook. They kept their AAA rating. The U.S. has kept its AAA rating, so there's really nothing changing there. Yes, it's going to put more scrutiny. Yes, it's a shot across the bow. That's ultimately we're going to have to pay this price. But in the short term, I think it's just a short-term panic, and the markets will probably continue back up. At least in the short run. I'm not saying we're going back to 52-week highs. I think you bounce later this week based on light volume and the holidays. And again, I think they'll do their best to keep the market up into the holiday of Friday. Coming up, market is closed on Friday. Just keep that in mind. All right, a couple other things to look at. Let's take a look at the dollar with this downgrade in debt. Outlook, you are seeing the dollar have a big pop today. Now, many people would say, well, yeah, but they're downgrading the U.S. kind of, or at least the outlook. Why isn't the dollar dropping on that? This is why. Because when any country gets a downgrade, whether it's the debt rating or just the outlook, what you see is borrowing costs go up. Why? Because if you know a country's, probably not going to be able to pay back its debt in the future and they're getting downgraded, what are you going to do? Well, you're going to say, well, if I'm going to lend you $100, I want to make sure I get a great return on that. I'm not willing to do it for just, 1 or 2%. I want 15% or 10% return on that guaranteed in 1 year. Then I'll lend you the money. Otherwise, you're not getting my money. So it raises the cost of borrowing for the U.S., and what that does is mean it's less likely to borrow money. It's a lot harder to borrow money because you have to pay so much interest. So the harder it is to borrow money, that means less money supply. Less money supply means a stronger dollar, and that's why you're seeing the dollar jump up today. Now, I don't necessarily think this is going to be a long-term bounce on the dollar, by the way. I think short-term, very much so. We'll have to watch it and see how much it goes. But right now, you can see the 20 moving average after piercing it is coming back in. Oil is getting hit a little bit today on this as well, down $1 on the USO. A little bit of a bear flag here right now. Looks to be playing out to the downside. And also the GLD is actually stronger today, up 67 cents. And the SLV, which is silver, is actually up a penny. Now, why are silver and gold positive when oil is down? Well, oil is more of a domestic, consumption. It's a global consumption, domestic consumption issue. If things kind of aren't looking as rosy as they were yesterday, you have more issues in Europe bubbling up, then people consume less oil. It drops the price of oil. That's one thing. However, gold and silver are a store of safety. And right now, you have a lot of panic going on out there, folks. Bottom line, people aren't too confident with the future of the global picture or the United States in regards to their debt. All right, that's enough for today, guys. Again, join the Research Center. Join the chat. Take your free trial. Start your 7-day free trial today. We will see you in there. Be ready for some more plays. The plays are fast and furious. Let's make some money.